Hey guys, this is Matt from Hedge again. You're speaking to the founder of this crypto educational service. Today, I'm going to be talking about Bitcoin futures, liquidations and exchanges, and a lot of important things that have been affecting the price of all cryptocurrency recently. Before we start this video, it's important that I tell you that this isn't financial advice. Nothing here in this video should be misconstrued as such, and we don't accept liability for any damages you incur. And as long as you understand that, you should be able to enjoy these videos with ease. Today I'm going to be talking about something extremely important. It has to do with futures. Now, what are futures? Futures are basically, they're contracts that are set up so that way people could be betting on the price of something going up or down. For example, let's say the price of Bitcoin is $50,000 and you're taking a bet, you're going along betting that the price is going to go up. That means you enter at $50,000 and anytime the price goes up, you make money. If the price goes down, you're losing money. How that works is basically you would take, let's say $100 and you could leverage it to be worth $1,000 on this futures trade. And then basically from there, how it works is by percentage gains, you have your margins either eaten or given. And this is extremely important because that whole system that I just explained is the reason why Bitcoin and all cryptocurrencies have been so volatile recently. You might ask yourself, how does that really affect anything? Well, I'm going to explain right now. And how it works is basically you enter in at a high leverage thinking, I'm going to make money by Bitcoin going up. Well, the exchanges, they have all this personalized data to see how many people are going long and how many people are going short at all times. And when they see that a trade is overcrowded, meaning that everyone's expecting Bitcoin to go up, and then it reaches, let's say, a milestone of, let's say, $60,000 or in that price range, US, by the way, US dollars. Once it hits that price milestone, usually the trade will become overcrowded, which means there's a lot of people banking on it going up. What'll end up happening is exchanges, and this isn't guaranteed, this isn't something that's been confirmed, but it happens to be very suspicious that it always happens around the same milestones. What ends up happening is exchanges seem to be coordinating with whales and other investment firms to drop the price of Bitcoin at this time. So what'll happen is the price will go from 60,000 back down to 40 or 45 or 47. A big drop, a steep enough drop that it'll liquidate everyone. And liquidate means that their money is taken. It's taken from them. They will never get it back. How that works is these exchanges are taking advantage of the fact that people are kind of gambling, because this is a gambling mentality. And the fact that you could go up to 100 times your leverage, meaning that if you have a $100 position, it could be worth 100 times that position. People get into that gambling cycle and they take their money the same way that a casino would. This is kind of a dirty tactic because it actually stops the price of Bitcoin from moving beyond where it's supposed to be, because it becomes more profitable for the exchanges and the whales to keep the price going sideways between $45,000 and $60,000, because every time the price drops, everyone loses their money. And if you look at the statistics on Glassnode, which gives you all on-chain analytics and metrics, meaning it tells you everything that's going on in the Bitcoin blockchain in terms of everything. It's just constantly monitoring it. You'll see that I believe it was between April 22nd and April 25th, there were over $2 billion worth of liquidations in those few days on the long end, meaning that anyone who went long lost their money. Out of those, let's say, $2 billion that were lost, only $100 or $2 million were lost on the short end, meaning people betting on it going downwards. And how that works is people get overly confident on a trade, and then the whales drop the price. And once the whales drop the price, the exchanges get to receive all that liquidity, all that money that's been taken, so that they can buy more Bitcoin to rebuy on the low. So this is actually something very, very suspicious, because you'll see that many major players with big money are coordinating to keep the prices going between that range right now. It's the most profitable it's been for Bitcoin. It's not worth it for them to let it go parabolic to 100, but it's not worth it for them to let it drop below 40, because they don't want people to lose confidence in Bitcoin, because they won't be able to keep that liquidation pattern going. It's extremely important for me to mention to you people, if anyone watching this video is doing futures, make sure you never over leverage. When things get volatile and you're in a position of, let's say, high leverage, make sure you either exit because you're going to lose your money, or the alternative is if you do decide to risk it, make sure you go on a very low leverage. And I'm not going to tell you how many X you should put from there. That's up to you. But understand that the exchanges are using bots to take your money. Me personally, I don't, this is an opinion, it's not advice. You're not going to win against the bots, especially when they have billions of dollars being used to control which way the market's going. In times like this, your best bet is to buy the dip and hold tight and wait till we get out of the volatility pattern. Because once we're out of it, once people start getting wise and they understand that, you know, they're not going to be doing futures and they can't be taking billions of dollars on the daily from people just from them making bad bets, they'll be forced to let the price of Bitcoin run either up or down, depending on where the buyers are interested at that point. But that's the only way we're going to see Bitcoin's actual price trajectory, is when it becomes less lucrative to take people's money between that range, that price range. The reason it's important to be talking about Bitcoin and its current, I guess, its price range where it's been bouncing and hitting ceilings is because if you look at any cryptocurrency's Elliott pattern, which is basically the pattern it shows on the graph, you'll notice that almost all of them are identical to Bitcoin's, give or take a few days where another cryptocurrency is hotter. It doesn't happen often where another cryptocurrency will break out of Bitcoin's pattern, because at the end of the day, Bitcoin is like us, it's walking. And imagine it has a ball and chain attached to it. Bitcoin is the person. The chain is Ethereum, because Ethereum is basically the largest altcoin, as well as the fact that almost every other altcoin is built on an Ethereum software or platform. So Bitcoin moves, Ethereum is the chain that moves second, and then every other cryptocurrency becomes the ball. So it becomes almost like every time Bitcoin moves, the whole market drags along with it. So it's important to be looking at Bitcoin's price patterns more than any other price pattern, because most of them will be dictated by how Bitcoin moves. So if you want to make educated trades on altcoins, it's very important to follow how Bitcoin moves, because from there you'll be able to make a decision on when to enter an altcoin, as well as when to sell it. What I would recommend to people is they understand that if you do futures trading, and this is for stocks as well, and any form of futures trading or options trading, you should understand that it's extremely risky and you will very likely lose your money. It's just kind of the way it's been built, especially now with all the bots and all the coordination against price action and how it should be moving naturally versus like in terms of like retail investors and institutional investors, because technically there's no reason Bitcoin's price should be down. With all the partnerships that have been coming in, there's really no reason why it should be going down. In fact, JP Morgan just announced that they're going to be launching their own private fund, meaning that Bitcoin is about to go mainstream. There's no reason the price should be dropping. Technically, it should have already gone parabolic. So that's how you know that there's manipulation to keep the price at about 50. And the reason they're keeping it at 50 is because it's just out of reach for retail, but just in reach for institutions. And by making the price go between 45 and 65, let's say in that almost $20,000 spread, it's very easy to scare out retail investors, and then it's very easy to accumulate with all the money they've been taking in the futures. So every time they take $2 billion, where do you think it goes? It goes right back into Bitcoin. People divide their profits. Because if you look at how much Bitcoin is on the exchanges, it's still going down. It's usually between 10 and 15%, and it's only going to get smaller and smaller. I think we can more or less wrap this up. I want you guys to like, subscribe, and comment on my videos. And if you like them, feel free to keep watching.
Have a great day or what?
No, don't have a great day. Have a great day.